Welcome to our deep dive into Block Inc.'s Q3 2024 financials,
Oh, yeah.
straight from their freshly filed 10Q with the SEC.
Right.
We're about to uncover how Block is performing, what strategic moves they're making, and what challenges they're facing.
Block's story is a fascinating one.
Yeah.
They're not just riding the wave of the digital economy.
Right.
They're actively shaping it. This deep dive will give you a glimpse into their playbook.
Let's set the stage.
Yeah.
We're talking about Block Inc., the powerhouse behind Cash App and Square, trading on the New York Stock Exchange under the ticker symbol SQ.
Yep.
And get this, they've fully embraced a distributed work model.
Wow.
No fancy headquarters for these folks.
It's a signal of their adaptability and a focus on attracting top talent no matter where they are.
Right.
This distributed model might just become the future of work.
Now on to the numbers that are getting investors buzzing.
All right.
Block reported a net income of $281.1 million for Q3 2024. That's not just good. It's a phenomenal turnaround from the $93.5 million loss they reported in the same quarter last year.
This turnaround isn't just a blip.
Right.
It's a testament to their laser focus on disciplined growth and savvy cost management, which they emphasize throughout the report.
Yeah.
They're not just growing for growth's sake.
Right.
They're aiming for sustainable success.
It's like they hit the reset button and came back stronger than ever.
Exactly.
And their total net revenue, it's a healthy $6 billion, an 11% climb year over year.
Nice.
Their gross profit is also singing a happy tune, reaching $2.2 billion, a solid 21% jump compared to last year.
These results show that their strategic initiatives are working. They're effectively controlling expenses and driving growth across both their Cash App and Square ecosystems, creating a strong foundation for future expansion.
And speaking of strategic moves, Block's commitment to disciplined growth is evident in their approach to staffing.
Okay.
They put a cap on their employee base at 12,000 back in 2023, and they've managed to stay below that number.
It's not about slashing jobs.
Right.
It's about smart resource allocation.
Okay.
Think of it as strategic pruning to make sure they're operating at peak efficiency.
Right.
They've achieved this through performance management, centralizing teams, and cutting out redundancies. It's about working smarter, not harder.
It's like trimming the fat, but in a very strategic way.
Exactly.
And they're not stopping there.
Oh.
They're scrutinizing their vendor contracts, aiming for better cost management and greater value.
I see.
It's all about agility and efficiency in a dynamic economic landscape.
Exactly. It's about making every dollar count and ensuring that each expense aligns with their overarching strategic goals.
Right.
This meticulous approach to cost management is a key driver of their financial resurgence.
And they're putting their money where their mouth is, literally.
Oh, wow.
Block repurchased a whopping $345.6 million of their Class A common stock this quarter as part of their $4 billion share buyback program.
Wow.
These buybacks are often seen as a signal of confidence in the company's future prospects.
It's a way to reward their current shareholders and boost earnings per share, which can attract new investors and further strengthen their financial position.
Right.
Basically, they're signaling that they believe their stock is undervalued and poised for growth.
Now let's dive into the heart of Block's operations. There are two main segments, Cash App and Square.
Okay.
Both had a stellar Q3 2024 Cash App revenue soared by a healthy 6%, and Square's revenue climbed 5% year over year.
This is a key takeaway.
Yeah.
While some people might think of Cash App solely as a platform for Bitcoin transactions,
Right.
those revenues contribute a relatively small portion to their overall gross profit.
Yeah.
It's a testament to Block's diversified revenue streams and their ability to cater to a wide range of financial needs.
That's a crucial point.
Yeah.
They're not putting all their eggs in the Bitcoin basket. They've built a robust ecosystem within Cash App that goes beyond cryptocurrency,
Right.
offering peer-to-peer payments, investing options, business tools, and even a debit card.
This diversification is key to their resilience, especially with the ups and downs we've seen in the crypto market. They're creating a more holistic financial experience for their users, and that strategy seems to be paying off.
It's like they've built a financial supermarket within Cash App, catering to a wide range of needs.
We give that.
Catering to a wide range of needs. But let's be realistic. Every investment comes with risks, and Block doesn't shy away from disclosing them in their 10Q.
Transparency is crucial, and Block lays out the potential challenges they face, categorizing them into business, regulatory, operational, and economic risks.
So let's unpack some of these risks, starting with their reliance on third-party systems and services. Block depends on these partners to process transactions and move money smoothly. But what happens if these systems falter?
It's like relying on a bridge to cross a river. If the bridge weakens, it impacts everyone crossing. For Block, it could disrupt their operations, potentially impacting their revenue and customer trust. It's a risk they acknowledge and are actively managing by diversifying partners and implementing robust backup systems.
Then there's the elephant in the room, data security and privacy. Block handles vast amounts of sensitive information, names, addresses, payment details, the works. Any breach or security lapse could be disastrous, not just financially, but also for their reputation.
It's a high-stakes game, and Block is fully aware of the responsibility they carry. They emphasize robust security measures and continuous vigilance to combat cyber threats. Think of it as building a fortress around their data, constantly reinforcing it to stay ahead of those trying to breach their walls.
It's a constant battle, especially in today's digital landscape. And with their growing buy now, pay later platform, they also face the risk of consumer defaults and merchant insolvency. What happens if those buy now, pay later customers can't make their payments?
It's like extending credit. There's always a chance the borrower won't be able to repay. For Block, this could lead to losses impacting their BNPL platform's profitability. To mitigate this, they're using sophisticated risk assessment tools and diversifying their merchant base to spread the risk.
They're also not immune to the challenges of attracting and retaining top talent in a fiercely competitive job market. They need the brightest minds to drive innovation and stay ahead of the curve.
Talent is the lifeblood of any tech company. Block recognizes this and is actively building a strong employer brand and fostering a culture that attracts top talent. They're offering competitive salaries, benefits, and opportunities for growth and development. They're essentially competing for the best players in the tech league.
And then there's the complexity of integrating acquired businesses smoothly. It's not as simple as just merging two companies. It takes careful planning and execution to harmonize different cultures, systems, and processes.
It's like fitting together pieces of a puzzle. Each piece is unique and needs to be carefully aligned for the bigger picture to emerge. Block recognizes this and emphasizes careful planning and execution to maximize the value of their acquisitions.
And let's not forget about their reliance on the performance of small businesses, especially for their Square segment. These businesses are the backbone of their ecosystem, but they're also vulnerable to economic downturns.
It's a symbiotic relationship. If small businesses thrive, Block thrives. If they struggle, Block feels the impact. Block recognizes this and is actively providing resources and support to help their merchants navigate challenging economic conditions.
Finally, there's the ever-present shadow of regulatory scrutiny. Their Cash App Investing and Square Financial Services subsidiaries operate in highly regulated industries. Any changes in regulations could significantly impact their operations.
Think of it as playing a game with evolving rules. Block must stay informed, adapt quickly, and ensure compliance to stay in the game. They're actively monitoring regulatory developments, engaging with policymakers, and building robust compliance frameworks to navigate this complex landscape.
It's a high-wire act, but they seem to be balancing these risks with a mix of caution and innovation. They're not burying their heads in the sand. They're acknowledging the challenges head-on and taking proactive steps to mitigate them.
It's a sign of mature leadership. They're not just focused on short-term gains. They're building a resilient and adaptable company that can weather future storms.
Now let's switch gears and delve into Block's revenue streams. They pulled in an impressive $5.97 billion in net revenue for Q3 2024. A big chunk of that $1.7 billion came from transaction-based fees they charge merchants using Square.
That's the engine of their Square ecosystem. These small fees, multiplied across millions of transactions, generate a significant revenue stream. Think of it as a toll booth on a busy highway. Each car pays a small fee, but the collective revenue is substantial.
Then we have subscription and services-based fees, which brought in $1.25 billion in revenue for the quarter. This includes subscriptions to their software services, payroll processing fees, and those premium features within Cash App.
This showcases Block's evolution beyond just processing payments. They're offering a suite of value-added services that generate recurring revenue. It's like building a loyal customer base that pays a subscription for ongoing access to valuable tools and services.
And they haven't abandoned their hardware roots entirely. They still sell point-of-sale terminals, those sleek devices you see at trendy coffee shops and boutiques. This brought in $36.8 million for the quarter.
It's a reminder that physical and digital commerce are intertwined. These hardware sales represent a tangible touchpoint for Block's brand and services. It's like having a physical storefront that complements their online presence.
And then there's the topic everyone wants to discuss, Bitcoin. Their Bitcoin revenue reached $2.4 billion for the quarter. It's a hefty portion of their overall revenue.
It's certainly eye-catching, but remember, Bitcoin's contribution to their gross profit is much smaller. This underscores the strategic importance of their diversified revenue model. They're not putting all their chips on the Bitcoin table. They're spreading their bets across multiple revenue streams.
Now let's talk about how Block manages its finances. They utilize a mix of debt financing and liquidity management tools to fuel their growth and operations. One of these tools is senior unsecured notes. In May 2024, they issued $2 billion of these notes, due in 2032, carrying a 6.5% interest rate.
Think of it as taking out a long-term loan. These notes provide Block with a substantial amount of capital to invest in growth potential acquisitions or to strengthen their balance sheet. It's like taking out a mortgage to buy a bigger house.
Then there are convertible notes, a more complex financial instrument. Block has 3 different series of these notes outstanding, all issued back in 2020. We're looking at $1 billion due in 2025, another $575 million due in 2026, and a final batch of $575 million due in 2027.
These notes offer investors the best of both worlds. They receive interest payments like a regular bond, but they also have the option to convert these notes into Block stock if they believe the stock price will rise. It's like having a ticket to a concert with the option to upgrade to backstage passes if the band becomes super popular.
To ensure financial flexibility, Block also secured a $775 million revolving credit facility back in 2020, maturing in June 2028. It's like having a safety net, a readily available source of funds if unexpected expenses arise.
This credit facility provides them with a financial cushion, ensuring they can meet their short-term obligations and pursue strategic opportunities without scrambling for cash. It's like having an emergency fund for unexpected financial hiccups.
They also use warehouse funding facilities to support their BNPL platform. These facilities allow them to finance customer purchases without tying up their capital. As of September 30, 2024, they had about $965.8 million outstanding on these facilities.
This highlights their commitment to the burgeoning BNPL market. These facilities provide them with the liquidity to fund BNPL transactions, enabling them to scale their offerings rapidly. It's like having a separate line of credit dedicated to their BNPL operations, allowing them to grow this segment aggressively.
Navigating the complex world of taxes is another challenge for Block. Their global operations mean they're subject to a web of tax laws and regulations, each with its own nuances and complexities.
Imagine trying to solve a multi-dimensional puzzle, where the pieces and rules change constantly. That's the challenge of international tax planning. Block strategies aim to minimize their overall tax burden while ensuring compliance with each country's regulations.
They're transparent about these challenges, acknowledging potential scrutiny from tax authorities regarding their valuation methods and intercompany arrangements.
Governments are increasingly scrutinizing multinational corporations' tax practices. Block needs to be prepared to defend its positions and demonstrate compliance. It's like playing a game of chess, with tax authorities anticipating their moves and strategically positioning themselves to avoid checkmate.
They also highlight the evolving landscape of digital taxes as countries grapple with how to tax companies operating across borders in the digital realm.
It's uncharted territory, and Block is actively monitoring developments, participating in discussions, and adapting its strategies to navigate this fluid landscape.
And they're facing another hurdle, the American Rescue Plan Act of 2021, which lowered the threshold for reporting payments for goods and services. This creates additional paperwork and administrative burden for companies like Block.
It's like adding another layer of bureaucracy to an already complex process. Block is investing in systems and processes to comply with these new requirements efficiently.
Their tax situation is further complicated by valuation allowances on their deferred tax assets. In some countries, they're uncertain about recovering these assets in the future.
Think of it as having potential tax benefits on paper that might not materialize. Block is taking a conservative approach by recognizing these allowances, which can impact their reported earnings.
Moving on to stockholders' equity, Block has been actively repurchasing its shares, signaling confidence in its future. In October 2023, their board authorized a $1 billion buyback program for their Class A common stock. Then in July 2024, they upped the ante with an additional $3 billion authorization, bringing the total to $4 billion.
It's a powerful statement. By buying back their shares, they're reducing the number of shares outstanding, which can increase the value of the remaining shares and potentially boost earnings per share. It's like consolidating ownership of a valuable asset, making each remaining share more valuable.
It's like they're saying, we believe in our company so much that we're buying back our own stock. And they're not just talking the talk.
Right.
During the first 9 months of 2024, they repurchased a substantial 14.6 million shares, totaling $987.2 million.
They're putting their money where their mouth is, demonstrating a strong belief in their long-term growth potential. It's like doubling down on their own success.
But buybacks aren't their only strategy for rewarding shareholders.
Okay.
Block also utilizes stock-based compensation, primarily stock options and restricted stock units, to attract and retain top talent.
It's a common practice in the tech industry, especially for companies like Block that are growing rapidly and competing for the best minds. It's like offering a piece of the pie to incentivize employees and align their interests with the company's success.
It's a win-win situation,
Exactly.
motivating employees and rewarding shareholders. Now let's dig into some of Block's key operating metrics.
Okay.
They use non-GAAP financial measures like adjusted EBITDA and adjusted earnings per share to give a clearer picture of their performance. Can you break down the difference between these non-GAAP numbers and the standard GAAP figures?
Think of GAAP, or Generally Accepted Accounting Principles, as the rule book for financial reporting. It's a set of standardized guidelines that all publicly traded companies must follow. But sometimes these standard rules don't capture the full picture of a company's operating performance.
I see.
Especially for companies like Block that are in growth mode and might have one-time expenses that skew the numbers.
So they're essentially adjusting those GAAP numbers to exclude certain expenses that they consider non-recurring or not reflective of their core operations.
Exactly.
Like stock-based compensation or acquisition-related costs. But it's important to remember that these non-GAAP measures aren't standardized right.
Exactly. Different companies might calculate those non-GAAP metrics differently, so it's essential to understand what's being excluded and why before making comparisons.
It's like comparing apples and oranges.
Right.
So what do Block's adjusted figures tell us?
Their adjusted EBITDA for Q3 2024 was a solid $527.6 million,
Okay.
a significant increase compared to the same quarter last year. This metric adjusted EBITDA is often used as a proxy for a company's cash flow from operations.
Right.
So this positive trend is a good sign.
It's like looking under the hood and seeing that the engine is running smoothly
Right.
and their adjusted earnings per share.
That came in at a respectable $1.88 for the quarter, a healthy figure that provides a clearer picture of their profitability after stripping out those non-recurring items.
So both their adjusted EBITDA and adjusted earnings per share paint a positive picture of Block's operating performance.
Yes.
But let's not forget that even the most successful companies face risks.
Risk is part of doing business, especially in a dynamic and ever-evolving industry like financial technology. Block acknowledges these risks in their 10Q filing, grouping them into 4 categories: business and industry risks, regulatory and legal risks, operational risks, and economic and financial risks.
It's like navigating a complex obstacle course with hurdles coming from all directions.
Right.
Let's unpack some of these risks, starting with those related to their business and industry. Block highlights its dependence on attracting new sellers and customers while keeping existing ones happy.
It's a balancing act. They need to constantly innovate, provide excellent service, and offer competitive pricing to stay ahead in a crowded market. It's like hosting a party. You need to keep inviting new guests while making sure the regulars still feel welcome and entertained.
And what if their growth slows down? Investors are used to seeing Block expand rapidly, so any slowdown could trigger concern.
Growth is the lifeblood of any young company, especially in the tech sector.
Hmm.
Block needs to demonstrate that it can sustain its growth trajectory, whether through expanding into new markets, developing new products and services, or making strategic acquisitions.
Speaking of acquisitions, Block acknowledges that integrating those acquired businesses is a process that requires careful planning and execution.
It's like merging 2 families.
Right.
Each has its own traditions, dynamics, and ways of doing things. It takes time, patience, and a willingness to compromise to create a harmonious blended family. The same applies to merging companies. Block needs to carefully integrate these businesses to maximize their value and minimize disruption.
And their reliance on third-party partners for various services creates another potential vulnerability.
It's like building a house with materials from different suppliers.
Right.
If one supplier delays delivery or provides faulty materials, it can impact the entire construction project. Block needs to manage these partnerships carefully, ensuring that their partners are reliable and can meet their standards.
Then there's the risk associated with their BNPL platform. What if those buy now, pay later customers default on their payments, especially in an economic downturn?
It's a valid concern. Block needs to carefully assess the creditworthiness of their BNPL customers and have systems in place to manage potential defaults. They're essentially acting as a lender, and they need to balance risk and reward to ensure the sustainability of their BNPL platform.
And even a tech-savvy company like Block faces the perennial challenge of attracting and retaining top talent in a fiercely competitive market.
Talent is the fuel that drives innovation. Block needs to offer competitive salaries, benefits, and a compelling work environment to attract and retain the best minds. It's like building a championship team. You need to recruit star players and provide them with the resources and support they need to succeed.
And their Square business, which relies heavily on the success of small businesses, is vulnerable to economic downturns.
It's a cyclical relationship. When the economy weakens, small businesses often struggle, and this can impact Block's bottom line. Block recognizes this vulnerability and is taking steps to support its small business merchants, offering resources, tools, and flexible solutions to help them navigate challenging economic conditions.
Now on to those regulatory and legal risks. Block highlights the potential for increased scrutiny of their Cash App investing subsidiary, which operates as a registered broker-dealer and is subject to strict regulations.
It's like playing in a highly regulated game where the rules can change at any moment. Block needs to stay informed, adapt quickly, and maintain a strong compliance framework to navigate this complex landscape. They can't afford to drop the ball on regulatory compliance.
And their Square Financial Services subsidiary, a Utah-chartered industrial loan company, adds another layer of complexity. Block is obligated to act as a source of financial strength for this subsidiary, meaning they'd have to step in and provide financial support if it encounters difficulties.
It's like having a younger sibling that you're responsible for. You need to be there to support them if they need help, even if it comes at a cost.
Then there's the risk of data breaches. Block handles vast amounts of sensitive customer information, making them a prime target for cybercriminals. Any breach or security lapse could result in significant financial and reputational damage.
It's a constant battle against sophisticated cyber threats. Block needs to invest heavily in cybersecurity measures, stay ahead of the curve, and be prepared to respond quickly and effectively in the event of a breach.
And in today's litigious environment, they also face the risk of intellectual property lawsuits, claiming they've infringed on someone else's patents or copyrights. These legal battles can be costly and time-consuming, even if Block ultimately prevails.
It's a reminder that intellectual property is a valuable asset in the digital age. Block needs to be diligent in protecting its own intellectual property and ensuring it's not infringing on the rights of others.
Now, shifting to operational risks, Block acknowledges the potential for system failures, service interruptions, and those increasingly common cyber attacks. Their reliance on technology makes them vulnerable to these disruptions.
It's like a city that relies on a power grid.
Right.
If the grid goes down, everything grinds to a halt. Block needs to invest in robust infrastructure, backup systems, and disaster recovery plans to minimize the impact of these disruptions.
And finally, let's not forget those broader economic and financial risks that are impacting businesses worldwide.
Right.
Recessions, inflation, volatile interest rates.
Yeah.
These factors can all impact consumer spending and business investment, ultimately affecting Block's bottom line.
It's a reminder that even the most innovative and well-managed companies are not immune to the forces of the global economy. Block needs to be adaptable, make strategic adjustments, and manage its finances prudently to navigate these uncertain waters.
So we've covered a lot of ground here, from Block's stellar financial performance to their bold strategic moves and the various risks they face. What's the key takeaway for our listeners?
Block is a company at a crossroads. They're transitioning from a payments processor to a more diversified financial services platform, pushing boundaries and challenging traditional financial institutions. They're showing strong performance, but they also face a complex web of challenges and risks.
So what does this all mean for you, the listener? Block is a company to watch closely. Their future success depends on their ability to execute their growth plans, manage risks effectively, and adapt to the ever-changing landscape of the financial technology industry.
Pay attention to their strategic decisions, their ability to innovate, and their approach to those key risk factors we discussed. Their journey will be fascinating to observe.
And remember, this deep dive is just the starting point. We encourage you to explore those source documents, dive into the details, and form your own conclusions. What stood out to you? What questions do you still have?
Perhaps as you ponder Block's path forward, consider this. How will the increasing convergence of technology and finance, a trend that Block is at the forefront of, reshape the financial services industry in the years to come?
Thanks for joining us on this deep dive into Block Inc.'s Q3 2024 performance.
My pleasure.
Until next time, happy investing.